Hey guys, Sam here. Well, we're early afternoon on October 13th, Friday the 13th. Hey, I thought we'd look at a few things here today. We've got Bitcoin, of course. The monster just keeps rolling, and we're getting some interesting developments in some of the other majors. So I thought if we have time, we can go through 4 or 5 of those. Again, I like to try and keep these around 15 minutes long. So anyway, so here's Bitcoin. This is the chart that has been a reference through this entire Elliott wave sequence. So this is the pardon me, what I've got up now is the 8-hour on Bitstamp. This thing has moved so far, and this extension is so substantial, I had to move to an 8-hour to try and contain it all. Now, I've pulled off all of the fibs here. You can see I still have an Elliott count on this. So we're still operating under the premise that, at least at this point, this is an extension in the fifth wave. Right? It's not uncommon, but in terms of the current breakdown on smaller time frames, that still makes the most sense. So what I thought I would do here is just show you some of the targets that might be close by, because what anyone who's not in the market is looking for is a reasonable place to try and get long. So are we at some targets here where we might see some additional resistance? Of course, we've blown through many of the targets on the way, but a couple of things I thought I would show you. So first, of course, now I have the pitchfork on this, and now I've added. So I have the original. Now this is a Schiff pitchfork, which takes the median line up 50% from the length of this low to this swing high. Just takes it up 50%. You can see how nicely that contained the impulse structure here until we got to this move. Now I've had to go to this is 100, 1.5, that's 200%, right? Just doubling, 225 and 300%. So you can see now we're running into some resistance here up at the 200% of the, giving this a little structure. Now, are we likely to come back to the median line? Well, there is historical precedent that would say that's a likely destination if we start to retrace. But right now, this is just a monster that does not want to slow down. Of course, we have the fork coming up, and a lot of people are trading this on the expectation that there's free money coming to them, right? So if you own Bitcoin and after the fork, you're going to own some Bitcoin Gold as well. So any retracements have been very shallow, and they've been just absorbed quickly by people looking to get long. Now let's look at some targets that might be available to us. And just, nothing complicated here. So I thought I would just, show it to you as I create them. So I'm just taking the retracement tool, going from swing low to our dominant swing high. And you can see we went right to the 50, and we went, so you can see some of these targets and how the response has been. So first algo target is the negative 23.6, right at the median line. That was our first retracement. We went to the outside edge of the pitchfork. Found support there, happened to be right in line with the 38, right, of that and this swing high. Just typical trading 101. Previous resistance becomes support. We've got structure there, and we've got fib retracement level. So nice looking structure there. So that was the last really sweet buy, right? And that's, if you've been following me for a while, that was one that set up rather nicely. Nobody anticipated, our target at that point was to the median line, which was 48.50. Hard to anticipate we were going to go this high, this far, this fast, but here we are. So looking at these targets, so we can see that the absolute extreme from this swing low is up to the negative 1618, sitting up here at really 6,009. Okay, so that's a reasonable target, and it's right in this outside edge here. We'd be at the 2.5%, depending on when we get there. If we get there's a little bit of time that plays into the structure here in terms of how fast we get there and how that lines up with our structure. So we want to look at all the major pivots here, and we know we had our last swing low here from the outside edge of the pitchfork at the 382 before we launched. So we want to evaluate that. So same process. I'm just going to grab the retracement tool. I'm going to go from our swing low here to our swing high. And you see something kind of interesting there. So the exact same relationship is in play here. So we have a perfect fib target here, right, with the negative 1618 from two swings overlapping within $2. So likely, I won't say that's a top. Certainly, I wouldn't be that presumptuous to call a top there. But I think you're likely to hit some resistance there. So that's unusual. And if we're going to get there, that's we're sitting here at 58.99. So about $200 higher. So looks like a very reasonable target. The question is, when do we get there? It wouldn't surprise me that we get there over the weekend. The reaction remains to be seen. Now, since we know we're in an extension here, what we're trying to do is, clearly we've got an impulse here. To looking for entry, we've got to go to a smaller time frame. So I'm going to go over to the 1 hour, and we'll blow that up. Okay, so here's the last little swing low that I've now labeled as a 1-2 before we went into this monster impulse. So I'm going to move this off just to show you this is kind of what we're hoping for in terms of an entry. So again, very, very simple. All I'm doing is pulling from the swing low, which we have labeled as a 2 low, to the current high, and we're looking for some sort of an entry position. And we know that very common target would be, on the retracement, would be the 3.8 to the 50. Now that's somewhat deep, and in this environment where we just have just rabid buying, and you've just got so many people anxious to be in, so any kind of retracement is being absorbed quickly. So you can see here that we had a retracement down to the 38.2. We had that, but it doesn't really give us the ideal structure that we're looking for. What we want to see is a three-wave structure such as this. So the ideal scenario would be that we put in an A wave, a three-wave B. Remember, we look at 3s and 5s. Dominant trend is in a 5. We look for counter trends in 3s. So that lines up nicely as a, let me open it up a little bit so you can see it better. So potentially a B wave. But then again, we thought we had that, back 600 points ago, right? We thought we had that potentially here because this lined up as a potential three-wave. We were looking for the retracement, and that's when it ripped. So nothing says that it has to do this. The ideal entry would be down here. I mean, it's amazing to think that if we're lucky, we get a retracement down to 5,300. It wasn't long ago before we were, hopeful to get over 5,000. So here we sit hoping for the possibility that we get a pullback over the weekend, brings it down, and this is a fairly large range. Now, you got to understand that. So we can be a little more precise in terms of what we're looking for. We know common relationships between the A wave and the C wave, most common being 100%. So if I draw that and I'm just taking the length of A and I'm projecting from what I've got currently labeled as the B wave, well, we get a little more precision down here. So if we're going to go to the 100%, we see this nice little pocket here where we get the 100% and the 50 within a few dollars of one another. So that would be the textbook perfect ideal. If it came, you'd want to jump on that. Retracement. Now, do we get there? Well, again, you're going to need to see something to cause that deep of a retracement, looking at where we are not now, knowing this fork is coming. So people don't want to sell. So what triggers that? Who knows? But it's certainly one to mark on your chart, and I'd want to be alarming it. So I'd want to know when we got to the 382. because nothing says we have to go 100% here. But I'd want to know if we revisit the 382, so that's a logical place for an alarm. If I break this down even to a smaller time frame, we can be even a little bit more precise about it and see if that looks even reasonable as a contender. So you got to do a little reset here whenever you change time frames with pretty much every trading platform. So I'm just going to slide this off if I can. Yeah, that's not what I want. I want this one. Okay, so I'm going to slide that off since we know that's a contender. So if we break this down, take note here. If I blow it up even more, you can see that we've had an ABC wave into the 382, and it's very possible that that's enough correction, and that what we're doing now is looking for the impulsive structure that would set up the fifth wave. So could be. Now, in classic Elliott, what we'd be looking for is a zigzag, which would be a 3-3-5. So ABC into an ABC, and now we'd be looking for some sort of an impulsive move down. Well, that's now getting suspect, because we have the potential for a 5-wave structure here. And let me show it to you. So we've had the A, there's the B, there's the C. So potentially we have a 1, 2, 3, 4, 5. Now let me take that to a smaller degree. Let's all the way go down to a micro. So possible. So with the overlap of the 1 wave, so what we have now is a diagonal, which it can only be in an A wave or a 1 wave. So does that make sense? Does that play within an Elliott context? It does. It does. But ideally you'd want to see some sort of impulsive move here. So, it's showing some hesitation. It's showing hesitation. So for us to look at this and say, well, potentially we've topped here and we're going to start an impulsive move down here, looking less and less likely. How would we know? How would we know? Well, we'd want to evaluate on the first retracement if we're going to call this a leading diagonal into a 1 wave before we go up and finish this sequence. Right? We've got targets up above. We know that 6,000 target is there from our longer time frame. If that's going to play, well, what we'd want to see is a little pullback here, and we'd be looking for entry here. So this is for the more aggressive. And actually for a 2 wave, we'd be looking between the 50 and the 618. So if you want to be more aggressive and you're comfortable going down to this small of a time frame, well, certainly your stop can be tighter. Now, do we get there? It's just again, we have to be patient and wait and see. But if you're comfortable here, I'd want to be alarming just 56.15 if we're going to come back down towards the 50 here, because this potentially plays as a larger, if we're going to complete the fifth and get up to those 6,000 numbers. Let me put this on a higher degree so it makes sense. Let's go to a minuet, and I'll put it in white. And I'll add the wave to it so you can kind of see what we're after here. Now, do we get that? Right now, that looks like the most likely contender, because I can divide this into 5 waves on this small of a time frame. So that's a contender, since we've already wicked the 38 once, and we did it in a 3-wave structure. The fact that we're now potentially here unfolding in a diagonal suggests that there's likely one more wave up, which makes sense. So if we go back over here, we know we've got this nice cluster up here at 6,000. I'll call it 6,010. And if we go back here and look at that, well, we can see where 6,010 would be. It's right about there. So we can see a potential roadmap to getting there. And if we pull back here, well, we know first target here is going to be a double top, right here on the -23. Next target, the -618. So as I will always tell you, when you're laying out an Elliott count, it's only a potential roadmap. That's all. It's all it ever is. It's potential. So right now, this could fail, in several different ways. A deeper retracement, then we have to consider this as possibly we're back on the ABC. Right? That can still play if we're going to come down, if we're going to come into the C wave impulsively. Right now, it's unclear. But because of the strength of the market, and because we can get a 5-wave subdivision here, I'd be looking for opportunities here, and I'd be a buyer at the 50. Right? That's the most likely. So if we're going to catch the 50, now you can be tight with the stop. So I'd put the stop, excuse me, under the 6.5. Unless so we were talking about entry at, let's call it 56.05 with a stop at 55.45. So if you want to be tight there, if you want to give it more room, because we know a wave 2 can go 786. Now you got to give it a little more. Now you're at stop at a little under. I'd be just under 5,500. So you've got an entry at 56 and a stop at 5,500. Again, it's just a matter of what kind of risk tolerance are you comfortable with, what kind of size are you trading, are you diversified into other coins? Do you have the reserve, buying power to make that entry? And I would be watching that closely, because this is here, and anyone not in is looking for a place to be long. So remember that the market is constantly trying to fake you out. So all we can do is say, well, what's most likely here? Wouldn't surprise me at all. Would not surprise me at all to see some sort of a push down to get weak longs out, so that stronger hands can buy it lower. Wouldn't surprise me at all. So just be cautious right here, because we're so extended. And there's so much greed in the market that I promise you we have weak longs in the market. That's people that, for whatever reason, caught this, and they're so excited about their gains that they're very nervous about giving any of it back. So you can see the 6,000 is close enough. The markets do like round numbers. So when you get that close to it, I promise you there are a lot of people out there looking at that going, oh, okay, well, maybe we get there. Okay, I'm going to take a little profit there. I'm going to keep my stop tight. And it's just that kind of nervousness that can create a quick retracement as those weak longs get squeezed out, and the stronger hands that would, comfortably be able to buy it lower without, with a stop much wider than that, would just be scooping that up, right? And that's very common amongst new traders, where you've got a winner here. You put your stop a little too close, it gets wicked out, comes down, and can do it in a bar. Will come down, take you out, and then rip back higher, as the stronger hands are able to buy it down here, because they want to buy it at lower prices. And how do they get it? They shake you out. That's how the market works. Doesn't matter if we're talking about Bitcoin or the S&P or crude or gold or name your foreign exchange currency. It's just the nature of the way the markets work. Strong hands are trying to push out weak hands because they want to buy it lower. And they know they can F with you just a little bit. It would just take a little bit of nervousness here to see this thing come down, and see a lot of people just bailing or stops getting hit when those sell orders fuel the retracement. Right, so something to keep in mind. So you've got a contender here. It would be nice to see it get here in kind of a meandering fashion, but the market doesn't always give you exactly what you'd want. One to watch, absolutely one to watch. And we know, if you take it here and you do get stopped out, and please don't be in the market without a stop. But if you take it here and you do get stopped out, know you've got the 50 down below. So if it's going to go deeper, and then we'd be coming right into the Vegas wave. Right, here's our Vegas wave. Look how nicely this is held here. So we've got a lot of distance down here. So by the time that got here, you'd have a nice structural area here where you could be a buyer at previous resistance. So place to watch. Something to we hope for it. Potentially here we're getting some clues. But I would tell you that any opportunity down here, I would certainly not hesitate to be a buyer. I wouldn't be scared of it, but I would certainly have a stop on it. And if you do get stopped out, accept it and look for the next entry. Okay, now there I was going to try and do multiple markets. All right, that's 19 minutes. I'm going to wrap there. I'll put it on a second video so we can break it up. Okay, guys, that's it for now.